I can get the team to help me with this. Let's see. Good day and welcome to the Impact Investing Show with your host Samuel I Can Win It Kim Win. I just want to say a great big shout out to Cheryl, who's in the chat, who told us we had no sound. I appreciate you. Thank you to all of you guys who have connected and who have tuned in. We are at episode 50, guys, and the question I always ask to myself is, how did we actually even get here? Guys, it's awesome to be here with you guys. It's awesome to get to another episode, guys. We are so close to hitting the 1 year mark. 52 episodes of the Impact Investing Show, guys. I don't know what to say except for let's keep going, let's make it happen. Guys, let me know in the chat if you guys can hear me now. I got FP Comms, Nicola from FP Comms in the chat. She says yes, and I know I got Cheryl Martin in the chat. Let me know if you guys can hear me clearly now. I do apologize for what happened first. So guys, look, let me say welcome to you. You know, it is a great pleasure to be here again. Episode 50, back to back from episode 1 all the way to episode 50, helping people strategize through their property storms. And now we're actually just helping people understand how they can invest in property, how they can utilize property as the vehicle to change their generational wealth, to change their health if that's what they need to do, and also to change the landscape of their life. Now, let me tell you this before I even go into the show, as it were. I want to let you guys know that I've used property to do all of the things I mentioned a moment ago. And guys, this is the reason why I'm so pumped about property as a vehicle to help people. And this is the reason why I'm like an evangelist for the use of property in order to help people move further, faster in their property investing journey. So for those of you who are new to the channel, if this is your first time coming to the Impact Properties channel, let me tell you something. This is the place where you get creative property investing on demand. Okay, there's nothing else to be said about that. It's just that simple. This is the place where you get to learn about creative property investing on demand. Every single episode, every single show, that's exactly what we're doing. We're teaching you about how to invest in property using creative investing strategies. And those creative investing strategies specifically are the kind of things that will help you to be able to invest if you've got little or no money, or if you're one of those people who have got funds but you want to maximize those funds so you can make sure you get the best out of every piece of your buck. This is the channel where we will show you, teach you, encourage you on how to do that. Now, this is episode 50, and the question you might be asking is the question I usually ask, which is, how did we get here and why are we actually here? Well, look, let me make it really simple for you guys. This time last year, it was actually a little bit earlier on in the month last year, March of 2020, I was the host of one of the largest property investing networking events in the UK. We would have over 100 people attend my monthly Canary Wharf property meeting every single month, okay? And from having so many people, I got used to the 20 people, the 30 people at the end of each meeting lining up to ask me questions about property, about their journey, about their specifics, and asking me about the strategies I've used that they could potentially use to move further faster in their property investing journey as well. And from having that kind of insight and that kind of a background, as you know what happened last year in March, in the UK, it was announced that there was going to be lockdowns. In the UK, it was announced that people needed to stay at home. And as a direct result, yes, I spent a couple of months doing our networking event online, but it just wasn't the same for me. There was just something missing. And I said to myself, you know what, I need to engage with people. I had so many people reaching out to me, sending me WhatsApp messages, sending me Facebook messages, DMing me on Instagram and all of these platforms. Some of these platforms I don't even know how to use properly. But as these people were reaching out to me saying, look, Samuel, this is the challenge they're going through. Samuel, this is the challenge they're seeing. Samuel, they're not sure what's going on in their life. You know, Samuel, I need help. What I said to myself is, look, I want to help these people, but I can't help them by just responding to text messages, responding to WhatsApp messages, by taking every call and answering every text that comes through. So I said to myself, how can we actually do this? And I opened this up to the team, and I said to the team, look, guys, how do we actually make this happen so we can help these people move further, faster, despite the current climate? And my team said something fantastic. They said, Samuel, all you need to do is make yourself available on a regular basis in order to help them strategize through the storm. And thus, this time last year, the Impact Show was born in the form of the Strategy in the Storm. And what we would do is we would actually help people strategize every single week by just showing up, opening up the phone lines and saying, guys, you know what, if you got challenges, let us know. If you got challenges, let us know. So guys, what I want to do is I want to help you understand that that's not just the whole journey. That's just been a part of the journey. And with all of that being part of the journey, we've continued week in, week out now for 50 weeks, showing up on a weekly basis in order to give you guys value, in order to help you guys move further, faster in your property investing journey. And as we've been doing that, we've seen some great testimonials. We've had people sending us messages. I'll share with you something that came in last week. This was so powerful. one of my students, okay, someone who's been on our online program before, WhatsApped me after last week's show. Last week was the first time they had been on the show. They WhatsApped me after last week's show, and they're actually mentoring now. They're actually mentoring other people in the property space, first time buyers, etc. And they actually WhatsApped me and said, the show is great. You're bringing life and enthusiasm to the show. But the thing that's really, really powerful is the questions that are being asked on your show are the same questions she mentioned her mentees are asking her. And that for me really stood out to me, because it made me realize, look, we are giving this value away for free, guys. We don't ask you for money. We don't ask you for anything except for your engagement. So again, if you haven't said hi in the chat, if you're not Nicola, if you're not Cheryl, if you haven't said hi in the chat, if you're not part of the team, guys, jump in the chat, say hi, say something, say hi, Samuel, I'm here, I'm here. Tell me where you're repping. Tell me where you're tuning in from. Tell me how you're getting this value. Tell me how you heard about the show. But connect with us. Let us know who's here, who's tuning in, and who's getting value on episode 50. So that's exactly how we got here. And what we started to realize week in, week out, as we was helping people strategize through the storm, was what we were actually doing. If you take the amalgamation, if you summarize all of the videos that we started releasing, all of these live shows, answering people's questions, we started realizing that what we were really doing is teaching people how to invest in property properly, not just the way that you've picked up, because they don't teach this stuff in school, but we're actually teaching people how to invest in property. So if you engage with this content and start to learn some of these creative strategies, and then you take this on board, you start utilizing this in your day-to-day property investing, you will see yourself investing in property in a way that many people who've been investing in property for a lot longer than you have not been able to do. So guys, this is what it's all about. All right, I got Cheryl in the chat. She says, come on people, don't be shy. I love that. Cheryl is a champion of the people in the comments. Guys, remember this, the comment section is for you. The comment section is for the community to get together, to really show what they're getting out of these shows, and also side by side to connect and find other people who are interested in the same things you're interested in, because that's why the comments are there. Now, what makes episode 50 different? There's a number of things. Some of the articles I'm going to share with you guys today I've never spoken about before, and we're going to specifically in this episode, slightly in terms of the news articles anyway, we're going to be speaking about how the current season, the current climate we're in, how the current season is going to have an effect on property prices currently. Okay, so I want you guys to be thinking about that. I want you to be understanding that. Now, we're also leaving the month of March. Okay, this is going to be the last episode in the month of March. Now, why is this important? This is important because March symbolizes the first quarter of any annual year. So if you're one of those people like myself who keeps an eye on what's going on in the property market, you'll understand that Q1 is over. So a lot of bigger corporations are going to start doing assessments and analysis of what happened in Q1. And that means when we enter Q2, April, and all of the subsequent months after that, we're going to start having information overload. People are going to be telling us this is what 2021 is going to look like based on the data that's come out of Q1. This is what 2021 should be looking like based on the information that's come out of Q1. So again, guys, I'm telling you, this show is key because this wraps up Q1, and this is the kind of episode that you guys want to definitely tune into. So now look, I'm going to jump in the comments, see if anyone's in the comments who I haven't said hi to already. Let me know where you're tuning in from, who you are. All right, guys, reach out to us in the comments. Let us know who you are and where you're tuning in from. I've got a reminder here from the team. They've said I should remind you guys, don't forget to say hi in the comments, and side by side with that, hit the like button. If you're not only hitting the like button, you should also get subscribed if you're not subscribed, and also feel free to comment. So let's jump into the chat and see who's in the chat. And listen, guys, let me say this as well. I want to share some massive appreciation for every single person who's hit subscribe, every single person who's been a part of what we're doing, every single person who's joined this community. Because guys, I'm telling you, it's massively encouraging when we see people coming out and saying, you know what, I'm getting value from this show, or I'm sharing this show. I'm going to let my Facebook community know about what Samuel's doing on the Impact Show and the value he's giving, all for free, etc., etc. So guys, let us know if you're getting value on the show. Write the word value. We usually say just write the word value if you're getting value on the show. If you're new, again, this is the clarion call. I have not done this on today's episode yet. If you are new, if you're watching this and this is your first time on our channel, or it's your first time on the live show with us live, okay, because it's one thing watching on replay. I've got got so many people that reach out to me and message me, Samuel, I saw your show on a replay. Great, fantastic. But if you are watching this live and you're brand new, all I want you to do is write the word new in the live chat. As you write the word new in the live chat, we will be able to welcome you to the community. And as Cheryl has said, I will just bang on the heart with Cheryl's message. Come on, people, do not be shy. I've got Dignity Careers who says, hi Dignity Careers, great to have you on the stream. If you are new, let us know. Write the word new in the chat. Also, I've got Oluyinka Kolawole who says, first time on the show, so just chilling and listening, learning, but shout out to all and especially to Samuel. It should be a cracking episode. Olu from London still. Olu, great to have you on the show. Let us know, Olu. Well, you said you're new already, so I can see that you're new. Excellent. Olu, great to have you on the show. Let us know if you get value. If you get value at any point throughout the show, feel free to just smash that like button and let the YouTube world know that this is where the value's at. Okay, wow, I love that. Olu says that he was the first one on, but he waited until now, as you do. Okay, so he's one of those silent snipers. I love that. Cheryl says, watching from Southeast London. I love that. Again, Olu's comment, he was the first one on, but he waited until now, as you do. I had Dignity Careers who says, carers, excuse me, apologies, misreading. Dignity Carers who says, hi, great to have you on the live show. And Dignity Carers goes on to say, new in the live chat. Love that. Guys, we are popping and we are pumping on today's show. I hope you guys are ready to go. Now, let me just say this. If you are ready to go, let me get an RTG in the chat. Just write the letters RTG in the chat if you guys are ready to go, and we will jump straight into our first segment of tonight's show, which is going to give you guys masses of value, tons and tons of value, which is what we're here to do. And this is what we've been doing for 50 episodes straight. I don't even know how we've been doing that for 50 episodes straight, but guys, I'm telling you, we've been doing it for 50 episodes straight. If you're someone who's been on the show before, let us know. Use one word to describe how you found the show in the past. Let us know in the chat. Let the new people in the chat know how you found the value on the show if you are not new. Okay, use one word and let us know how you found the show in the past if you're someone who's been on the show before. Now, I'm going to jump into the show disclaimer. I got Olu in the chat who says RTG. He's ready to go. I love that. Now, let me jump into the show disclaimer and we jump straight in. All information provided and results given are exemplary. Each person's results may vary or differ. Results are based on consistent, yes, I said it, consistent implementation of strategies. And we advise that you always seek legal and financial advice from a qualified professional. I got Dignity Carers in the chat who also says ready to go. So guys, listen, disclaimer's over. Let me just start by sharing some massive appreciation. I mentioned a moment ago the people that have hit subscribe, mentioned a moment ago those people, but listen, there is a myriad of people who support this channel, okay? Whether it be people who are on our team or whether it be people that like yourselves who just tune in and watch. And I just want to say, guys, I appreciate you. If you're someone who's hit like before, if you're someone who's watched for a minute before, if you're someone who's deciding to actually share the content, guys, I appreciate you. And the reason I appreciate you is because every time you hit that like button, what you are doing is you're telling the YouTube computers, the YouTube algorithm, that this is the kind of content more people need to see. Every time you press subscribe, you're telling the YouTube algorithm that this is the kind of content I'm interested in. All right, so guys, if you are interested in letting other people, in sharing the value, all you've got to do is hit that like button. All you've got to do is press that subscribe button. Now, today's show, what are we going to be doing? What are we going to be covering on today's show? Guys, I'm telling you, we've got a jam-packed show for you with a lot of insight. So I hope you're ready to go. Hope you've got your, if you got your whiteboard, hope you got your board marker, hope you guys have got your pens, hope you've got your styluses, your iPads, your tablets, whatever you need. And I hope you guys are seriously ready to go. I saw the ready to go in the comments, but I hope you are seriously, really ready to go, because we've got a lot to share with you guys in today's episode. So episode 50, what are we going to be sharing? We're going to be sharing the news. I've got a number of articles. Hopefully we might get to all three of them, but I've got a number of articles. Definitely we're going to touch on the first one and the second one that I'm going to share with you. We're going to be opening the phone lines in a short while. Straight after we open the phone lines to allow you guys to call in and share with us the specific challenges you might be facing in your property journey, straight after that, we're going to then do our live Q&A throughout the show, where you guys, again, throughout any time of the show, if you've got questions, throw your questions, your property questions, property related questions in the live chat, and just put the letter Q before your question, so me and the team will be able to find your question over in a moment or two. So guys, again, if you have a question, any question. There's no question too big, no question too small. As it pertains to property, just throw your question in the live chat and start your question with the letter Q. By you doing that, we will know that you have a specific question for us, and we will answer that question throughout today's show. Hope you guys are ready for that. Now, without further ado, as we do, we're going to open the phone lines and give you some time as we jump into the news. So without further ado, the phone lines are open right now. You should be able to see the telephone number on the bottom of the screen. Feel free to call in if you guys have any specific property problems, and we will go through your specific challenges with you. Side by side with going through those specific challenges, what we'll also do is we'll give you some insights into how I would tackle that situation if I was in your specific predicament. So don't be shy. As Cheryl said earlier on, guys, utilize the telephone line, and this is the question we want you to basically be answering. What are the property challenges that you are currently facing? All right, but we're going to come back to that in a moment. Phone line is open now. If you want to phone in, feel free to do so. Now, whilst you guys are doing that, I'm going to open up our news article for today. First news article is coming to you from the Express. Let's jump into this and share with you guys the insights that we want to pull out of this. So we said to you guys that we're going to be speaking specifically about what's actually taking place in the current climate and how it has an effect on property prices. So this is really important for a number of us who are actually active investing. So let's jump straight into this article and see. It's interesting how the content is there already, but the additional ads are what are taking ages to load up and slow our browser down. But let's get into this. All right, so the headline says, this is an article from March the 25th. This is 2 days ago. Okay, this was published in the Express. It says property sales and prices set for further boost as clocks change to BST, British Summer Time. I'll read through, and then again, guys, feel free to let us know your thoughts in the comments. If you're watching this on a replay, again, in the comments, let us know your thoughts. It says the property market is set to experience a further boost thanks to the clocks going forward on Sunday. The arrival of BST, British Summertime, could push property sales upwards. Okay, now let's jump into the meat of this article so you guys can see exactly what they're saying and why they're saying it. Okay. This article goes on to say the stamp duty holiday may not be the only factor in pushing forward property sales over the coming months. New research from Ascend Properties suggests that the arrival of British summertime could see property sales increase even further. The leading nationwide build-to-rent specialist looked at market data on transaction levels and sold prices during BST and Greenwich Mean Time. So they've looked over the historic data and seen that usually when there's British summertime, there is an increase, and the percentages are going to be quite interesting as we go on to them, but there's typically usually an increase in property prices during that period because there's an increase in demand. Okay, so the demand, as I talk about every single week on this show, the demand has a direct effect on the price if there is no change in supply. Okay, so let's keep going and read a bit more. It says the data suggested that 282,131 homes were sold during the BST period between March 29th and October 25th. Okay, it goes on to say, let's get you guys a bit closer. It goes on to say, which is a whopping 51% more than those sold the rest of the year. Hope you guys understand that. Okay, so what they're basically saying, if you're listening to exactly what's being shared here, they're basically saying that there's a 51% increase typically when we switch from the Greenwich Mean Time, GMT, to BST, British Summertime. Let's keep going and read a bit more out of this article before I give you some of my own thoughts in this regard. And again, guys, like I said, feel free to let us know in the live chat, what are your thoughts about this? And also those of you who are watching on a replay, let us know in the comments. It says property markets were boosted the most in the Northeast, where 62% more homes sold during BST compared to the rest of the year. Yorkshire and the Humber saw 57% more property sales during BST, with the East Midlands 55%, Northwest 54%, Southwest 52%, and West Midlands 51%. Also seeing more property sell during the summer months. Now here's again an interesting fact here. It says London saw the lowest increase but still saw 42% more homes sold during the summer period. I hope you guys understand that. That is a very, very powerful statistic to think about. Okay, now just think about this with me for a minute. Okay, London increases the least. Okay, I'm going to break this down for you because I want you to really, really see this. London it states increases the least in terms of that transition from GMT to BST, but it still increases by 41%. I'm not sure if you understand how powerful that is. What that's basically saying is there is a rapid increase in property sales when we hit summertime. Now look, some people may know why that is, some people may not know why that is. I'm going to share with you guys some of the insights as to why that is in a moment. And obviously as an investor, you can think about how you're going to utilize this information and tackle the market. So let's read on. It says, but it's not just transaction levels that could increase in the next few months. Sold prices also increased by a whopping 3% during BST. Southeast England, London, the Southwest and East of England saw the biggest increases, with homes selling for 2% more. Okay, and that's not all. It goes on to say Yorkshire and the Humber and the Northeast also saw sold prices increase by 1%, with sellers finding their properties sold for between £2,000 and £10,000 more. So guys, look, what do you think about this information? What do you think about the article I've just shared with you? I'm letting you know, guys, okay, something very, very simple right here. BST, British summertime, from what they're saying, okay, is not the time for you to be buying property the traditional way if you don't know what you're doing. Okay, I'm going to say that one more time because some people maybe didn't hear me. Okay, you might be one of those people who are sitting way in the back. So if you're sitting way in the back, you might not have heard me. I'm going to tell you again. Okay, British summertime is not the time to be buying property if you're buying property the traditional way. If you don't know what you're doing, if you don't understand the central tenets of how to use creative property investing to move further faster, British summertime is not the time for you to be buying property. Why not? Because the prices increase and so does the competition. Okay, you need to write that down. If you're someone who's taking notes, like, you know, the good students or those people who jump on the show, you need to write that down. There is more competition and there is increased prices. Okay, why would you, if you're an investor, why would you want to buy at a time when there is more competition and there are increased prices? The only reason you'd want to do that is if you have something up your sleeve, if you have a trick up your sleeve where you know something that other people do not know. And this is exactly what we teach people on our Monday masterclasses every single Monday at 8 p.m. Okay, we teach exactly what I'm talking about right here, which is what you need to know how to win in this current climate. So that's the first article I wanted to share with you guys. So in terms of some of my thoughts, let me give you some of my thoughts. British summertime traditionally is the period of time in any year, any annual period, where we have longer days. Okay, and that's how it's generally termed. We have longer days. Now, apologies guys, just thought I'd grab my drink. Now, when we have longer days, one of the key factors about having longer days is the simple fact that the moment the days are longer, people feel as though they can do more in a day. And as a direct byproduct, they look more, they look for more property, they become more active, they get more active at doing what they're doing. And property investing is no different. It's no different to the fact that someone now starts their tennis lessons up again because it's summertime, or no different to the fact that someone's now more active in terms of their golfing because it's summertime. And exactly the same thing happens as it pertains to property. What happens is summertime hits, the clocks change, people feel like they've got more time in the day, people do that bit more. And that psychological change is what I believe has a primary effect on all of the things we are reading about here in this news article. And I want you guys to think about this. I don't want you to be the person who doesn't realize this or who just thinks property is always business as usual, because property is not always business as usual. Property, generally, I'm talking over a number of period of years. Some people call it an 18 years. Some people call it 20 years. Property generally has a cycle. Okay, so there's the property cycle. That's the first foundational thing that if you're investing in property, you should understand. Okay, the property cycle is a byproduct of the fact that the property market is a market. Every market has what we call ebbs and flows, which is when it goes up and when it goes down. Okay, now if every market has ebbs and flows, if every market has a period when the market is good and it's going up, or periods where the market is not as good and it's going down, or compartments of the market when it's trending, when it's not increasing, it's not decreasing, it's kind of stagnant, it's just kind of staying where it is. If you understand the market does that generally, then you also understand that the property market is no different. And because the property market is no different, what generally tends to happen is there are times where the market is peaking, there are times where the market is going up, and there's equally times where the market is just staying stagnant or going down. Now, this is key information for anyone who's keen to invest, anyone who's thinking about investing, anyone who wants to invest in property, because you need to understand this in order for you to win in your property investing journey. You need to understand this in order for you to position yourself effectively and in order to be able to be someone who's going to get the most out of your property investing opportunities, someone who's going to be able to analyze the market appropriately. So that's the first thing. There's a property cycle, okay? And again, there's books out there about the property cycle, books which indicate it's a 18-year cycle, some which say it's a 20-year cycle, some which say it's different 15-year, 8-year cycles, etc. Now, first thing you have to understand is there is a cycle. The second thing you have to understand is where that cycle comes from. It comes from the factor that the property market is a market. Okay, so because it's a market, there's times where there's high supply, there's times where there's high demand, there's times where there's less supply, there's times where there's less demand. Okay, so again, these are just things to think about as it pertains to you walking into the property investing world. The next thing is, based on this article that we've just shared, if it's true that the BST time, the British summertime, is the time where most people come out to invest, as a real investor, what you've got to be thinking about is how do you circumvent that as an issue? How do you actually get around the herds of people? Okay, because human beings, we have herd mentality. We have a herd mentality. Okay, and you might not know what herd mentality is. If you've never heard of herd mentality, you can write the word never or never heard in the chat, and I can break that down more for you. Happy to do so. But herd mentality is something very natural to many human beings. They see 100 people doing something, they say, okay, I've got to be a part of that. And when you see demand in a property market because of some kind of false stimulation, like, oh, the stamp duty tax is going to be removed, what generally tends to happen is you see lots of people flock to the market when they don't really need to, because there's things you can get, there's deals you can get without flocking to the market in the same way. So again, these are things that we need to think about as we move forward as property investors in order to be successful in the marketplace. All right, so first key, there is a cycle. Second key, it's a byproduct of the market. Third key, here's the third key that I need you guys to be aware of. If there is a market and it obviously causes a cycle, there's going to be what we call micro cycles. Okay, so there are macro cycles, the major cycles like the property cycle every 18 years. But then there's going to be the micro cycles. Okay, now some people only really consider the location-based microcycles. Some people will say, well, London this, London that, London this, London that. What they're doing is they're talking about a microcycle as it pertains to the whole of the property market. Okay, so that's a small cycle within the major cycle. Okay, now what I want to help you understand is location is not the only microcycle. Now, yes, location has been sold as a fantastic microcycle due to people like Phil, from location due to the Homes Under the Hammer shows and all of these other shows that people, sit down daytime TV and spend all of their hours watching and don't realize how varied they actually are from the truth of actually going out there and investing. But the point is, nonetheless, okay, you have to think to yourself, if you are going to get invested, you need to be thinking about some of the other microcycles besides location, such as demand. Okay, so I don't mean demand as in what's the demand of the acquisition of property. I mean, what's the demand in terms of tenants and this specific property that I've put in this specific location. These are things we need to start to think about. I got Yogesh in the chat. Yogesh says hi. Hi, Yogesh. Great to see you on again. Hope you're doing well. Yogesh is one of our regulars on the show. So again, Yogesh, let us know how you generally find the show for those people who are new, for them to have an idea of how the show usually is. Yogesh has thrown a question in here as well. He said, please explain on herd mentality as it applies to property in the summertime, please. Excellent. So Yogesh, I don't know if you just joined us. We just went through a specific article. Again, as you know, all the links to the articles will be in the description of the video. I don't believe they're in the description right now, but they will be in the description shortly, especially for those of you who are watching on the replay. All of the links that we will discuss in this show will be in the description of the video. Now, what I was just sharing, Yogesh, a moment ago. So Yogesh says, could I please explain? Okay. And actually, what I'm going to do, I'm going to come on to that question in a little while. Yogesh asked me to please explain how herd mentality relates to property investors, to property investing. So we'll definitely do that. We'll definitely touch on that in a short moment. Now, all good. All right, so that was the first thing I wanted to share with you guys, the first news article, and also basically the simple fact that the British summertime does generally tend to have an uptake of interest in property than the traditional normal times, or the GMT times, the Greenwich Mean Time time. So let's jump into this second article, because again, this is something which is quite interesting and it relates to what we just read. But again, sometimes we read news in isolation without realizing the connection. Now, interestingly enough, excuse me, guys. Now, interestingly enough, okay, and I do think this is interesting because what I find funny is, although this was not a coincidence, maybe it was what people might usually call a coincidence. Now, what do I mean? Well, this article was also released on the exact same day, on the 25th of March. This article was released, and this article basically states that investors are set to inject tens of thousands into UK property. And this is from Property Wire, okay, again, one of the leading property news kind of sites. And they've basically shared here that they have an inclination that people are going to be heavily investing in property. Now, why do they have this inclination? Let's look into this, because this specific article I think is going to be extremely helpful for a number of our viewers. So again, just something to think about. Okay, the article states investors are sitting on an average of more than £37 each in investment capital that they are poised to inject into property, according to a study by property investment platform Brick Owner. Now, I want you guys to think about this. Okay, this is this is quite powerful. This is an organization who've done their statistics, and we're going to go into it a moment ago. But I want you guys to understand that this is basically corroborating. Let me use that terminology. This is actually corroborating the information we just shared. So we've just said to you, based on some statistics, it seems that during British summertime, there is an increase in prices. There is also, side by side with that, an increase in demand for property, okay, in transactional demand. We've then broken down that transactional demand increase, even at its lowest in London, is at roughly 41%. Now, again, as a statistician, I know when you see statistics as strong as 41%, that's a strong statistic, even if that's the lowest statistic out of all of the places it's taking place. So I want you guys to understand that. I got Yogesh who writes this comment. Great comment, Yogesh. Thank you. Yogesh says, excellent show. Advise everyone to call in for deep dive advice. Thank you again, Yogesh. Appreciate that. And again, Yogesh is someone who's called in a number of times for that kind of deep dive advice and insight into his situation. So it says investors are sitting on an average of more than £37,000 each in investment capital that they are poised to inject into property, according to a study by property investment Brick Owner. Let's go deeper. It says the property investment platform polled 126 investors. Now, again, guys, as a statistician, that's not significant, a significant sample of people they've asked, but it still does give you some indication and allusion to some of the things we read in the previous article. It says the property investment platform polled 126 investors about their investment intentions as the national COVID-19 vaccine, which is set to be the UK's roadmap out of lockdown, continued. It said asked how much money they had allocated to invest into property via platforms or direct, the average response was £37,345. Now let's keep going. All right. Now look, let's not even keep going. Let's say this. If you are an experienced investor, you would know that typically when you buy a buy-to-let property, you're going to be putting down 25% of the price of the property. Now, if on average, the average house price in the UK actually increased during this lockdown period from 2020 to 2021. So the average property price in the UK is now above where it used to be. It used to be in the region of just around 200. It was just touching the 200 mark. Now it's slightly above 200. I think it's actually hit towards 220, 240. Okay, somewhere in that region. Again, don't have the number off by head, but again, that's roughly, I think, from my last reading. So we're looking at an average house price in the UK being in the region of 220, being up to the region of 240. Okay, let's say even if we're looking around the 200 mark, a deposit on that kind of house is going to be £50,000. Okay, so what that means is, on average, the people that they're polling, on average, the people they're talking to are not people that necessarily can go out there and buy these properties. But that doesn't mean they're not people who couldn't go out there and invest with you, or invest with me, invest with other people who also have some funds in order to make that happen. So that's the first thing. The second thing looking at this specific statistic is to understand that these are people who regardless have that fund. So the question is, where are they going to sit in the market? Well, they're potentially going to sit at the sub 200 property price range. So that might be going up north, buying houses for 100,000, going up north, buying houses for 150, 130,000, where 37,345 on average pounds is a little bit over what their 25% deposit would be. So again, this is a good thing to look at, because the news we read a moment ago from the Express indicates that, hold on, British summertime, more people are investing. The news we read a moment ago from the Express says not only are more people investing, but the place we see the big transactional increase is actually in the northern cities. But following on from that, the place we see the least amount of increase in price is also the northern cities. So all of the information we shared on that first article, you can see how it starts to corroborate with what we're reading now on the Property Wire article as a secondary article, and kind of a secondary source to kind of back this up as well and give you guys some insights and information as we go forward. But let's keep going, because there's a lot in this article which I think gives us insights. Again, it's not a large sample. I've said that already. I'll say that again. But again, it gives us insights. So let's keep going. It says users were also asked to state what type of investment would interest them. Okay, so again, this is quite important, very interesting information. Please keep your ears perked for this so you can get some real value out of this. Users were also asked, okay, to state what type of investment would interest them, with the most popular, okay, and I'm going to read this again because I want you guys to really catch this, with the most popular emerging as residential, okay? Now that tells me something, all right? I'm not going to go into what it tells me too deep, but that tells me something. So I want you guys to really think about, what does that mean? If most people who've got roughly £37,000 to invest are thinking about investing in property, and 67% of those people, roughly, okay, from this sample specifically, but 67% of that group of people are thinking about residential property, what does that tell you? Okay, now for some people who've been investing for quite a while, that might say to you, these people are not necessarily the most experienced of investors. These people might be novice investors or new investors. Okay, but again, I'm not saying that's the case. I'm just saying we should be thinking about some of these factors, because what does someone who's brand new to the market want to do? They want to make sure they're not going to lose money. How can they make sure they're not going to lose money? One of the ways they can do that is by partnering with people who know what they're doing. So again, guys, I hope you're listening to this. Hope you're understanding how this is a great opportunity for you and I in order for us to continue to move forward in our property investing journey. So now let's just jump back in. It says followed by commercial at 48% and care homes at 42%. It goes on to say the average annual return they were looking for was 8.4%. I'll say that again. The annual average return they were looking for was 8.4%. Guys, isn't that great news? Because if you're the kind of person who knows how to go out there and do property investments and generate a 15% return on investment, generate a 25% return on investment, generate a 36% return on capital employed, you would be equally the greatest person for these people to put their money with and get that average 8% return that they're actually looking for. So again, I hope people are tuned in to what's actually being shared here and how this relates to your own property journey. It says, and the average most desired fixed term was 2 years and 8 months. So again, the question you might be asking if you're a creative property investor like myself is, what specific strategies can I use where I can recycle someone's money in 2 years or in 2 years and 8 months, roughly, okay, 2.5 years, 2 years to 2.5 years, and generate an 8.4% per annum return for the people who are giving me funds? Because that is generally the trend that they're basically saying stood out for the people they asked. Let's read the last couple of paragraphs and we'll wrap up on this one. He says, Brick Owners co-founder and chief executive Fred Bristol said, the pandemic is very likely to have had a chilling effect on the enthusiasm of property investors over the last year, but there are real reasons for optimism. He goes on to say, first, it's clear from surveys like theirs that investors have not lost their love of property and want to invest. So if that's the case, then obviously the first article we read is very, very relevant in light of this. It goes on to say, and second, we are already seeing early signs of a turnaround that may be linked in part to the successful vaccine rollout, a key precondition for the reopening of the UK economy. It says activity on Brick Owners platform has risen dramatically since New Year. In fact, the amount invested in first 2 months of 2021 was almost double that of the last 2 months of 2020. And anyone who's been following our show for a while, you guys will know that we basically did report some of the news that came out that said 2020 ended on a high. So imagine that if 2020 ended on a high, and we're hearing statistics potentially saying that the beginning of 2021 had close to double figures in comparison to the end of 2020. That's a key right there, guys. That's a key that tells you people still have an appetite. Not only do they still have an appetite, people are still moving towards property. So again, what does that mean for you as an investor? It means exactly what we exposed from the first article, that we potentially are going to be in an environment where there are going to be more people looking for opportunity. So what is that going to do for you? Okay, I want you to ask that question to yourself. What is that going to do for you? Let me know in the comments, guys. Let me know in the comments. What do you think is going to do for you? What kind of effect is that going to have on your property investing journey? Let me know in the comments. Those of us in the live chat, let me know in the live chat. But those of you who are watching on replay, let me know in the comments. What do you think what kind of effect is it going to have if there are so many more people coming to the market? How's that going to affect you on your property investing journey? Okay, so let's jump in. Now, I've got a third news article, but I want to make sure that I'm touching base with the questions as well. We've got Yogesh in the chat who asked a key question. I'll tap into Yogesh's question and come back in a moment. So Yogesh says in the chat, please explain how herd mentality and how it applies to property in the summertime, please. Excellent. So first and foremost, to answer Yogesh's question, I've done a video. Again, this is just to help you guys so you know you don't have to waste time looking for this stuff. And guys, listen, if you're getting value, hit the like button. Side by side with that, press subscribe. You know all the stuff to do so you can be a part of our community and a part of what we're doing here, and you can also move further faster in your property investing journey. Now, I've done a video, I think it was one of our vlogs actually, just to be precise, where I was basically breaking down herd mentality and how it has an effect on the property market, full stop. Okay, I believe that video is called Opportunities and Obstacles in the Property Market. So again, those of you who are interested in more about that, when we tune off of this video, you know, feel free to go and find that video on the Impact Properties channel. For those of you who want to know about the Impact Properties channel, it's impactproperties.co.uk/YouTube. That's impactproperties.co.uk/YouTube. Now, the video was called Obstacles and Opportunities in the Property Environment, and I remember breaking it down. That was one of the days where I was invited to speak at the National Landlord Investment Show, one of the largest investment shows in the UK, and it was their London event in Olympia. I was one of the main speakers, one of the keynote speakers, speaking about how to raise creative property finance. And one of the things I vlogged about that whole day was basically me and the team just put a video together talking about herd mentality. Okay, and the reason why it was powerful is because we had a real life example. On the day, I took public transport. I don't like taking public transport, partly because of the real obvious nature of how public transport generally is in the UK. Well, before lockdown, I don't know how it is now. But I try my best to stay away from public transport for several different reasons. But one of the reasons was because we get herds in public transport. And generally what would happen, okay, I'll give you an example. In that video, I show you guys a herd of people, like hundreds of people in a train station. Excuse me. Now, all of these people are trying to get into the train station, obviously to get on the platform in order to get on the train. Now, herd mentality works like this, okay? Someone, for example, I'm going to use a graphic example because it will just drive the message home really quickly. It will help everyone understand exactly what I'm talking about. It's kind of like a story time. So let's get you guys a bit closer. So basically, if you're in a train station with hundreds of people and everybody's waiting to get on the train, maybe one of the lines is broken down. So let's say because one line is broken down, let's say the Piccadilly line's broken down. So now everybody has to go onto the Northern line. So because everyone has to go onto the Northern line, you got everybody, herds of people, everybody lining up for the Northern line. And thus it creates a backlog, which obviously in car terms is called a traffic jam. So you got all these people trying to get up the escalator, all these people trying to get through the barriers, all these people trying to get onto the platform. You got the platform full, etc., etc. Okay. Now, herd mentality is this. If, for example, somebody had a gun, okay, let's say somebody had a gun. Somebody has a gun, they're on the platform, and they shoot the gun in the air, okay? What would happen? Okay, you tell me what would happen, okay? What usually would happen with a group of human beings, when there's a large group of human beings, is they all instantly will start to scatter, okay? Now, this is the crazy thing. This is what herd mentality is all about, okay? 99% of the people that would be running, 99% of the people that would scatter, 99% of the people that are like, I'm out of here, okay, have no idea what's going on. Okay, I'm going to say that again, okay, because I want you to understand this, okay, because this is herd mentality at its finest. This is how this stuff works, okay. A gun goes off in the air, okay, for whatever reason, maybe a real gun, maybe a fake gun, who knows, who cares, okay. But for the sake of this example, the gun goes off in the air, and what most human beings will do, regardless of whether they heard the sound or not, the people closest who potentially could see what happened would maybe start to run or start to hide or start to duck for cover. Okay, they'd have instant reaction. Okay, because they'd see something and respond in that way. Now, if they were trained, okay, let's say they were army officers, police officers, special forces, if there were people who had a level of training, they might know how to respond rather than react. But most people on the initial premise of what would happen, who would have seen what would have happened, would react, not respond. Okay, now, outside of that ripple of people that would have seen what would have happened would have been what we call the bystanders, people that didn't necessarily see what happened. They're not witnesses. They could act as eyewitnesses even though they didn't see anything, but just to share what they heard, how things happened, etc. But the point is they would run, and they would run not knowing why they're running, okay? And that ripple effect will continue until somebody who's so far outside of the perimeter says to themselves, hold on a minute, why are you guys all running? I'm actually interested in working out why you guys are running. And that is herd mentality at its finest. It happens all the time. Okay, you might go to a concert and you have an artist who's on the stage in a concert who says, guys, everybody put your hands in the air. What happens? Everybody puts their hands in the air because of herd mentality. You see another person do it. It's kind of like peer pressure on steroids, if that makes sense. Okay, it's kind of like what we understand as peer pressure on steroids. So herd mentality is one of the reasons why human beings generally tend to do things, not because they actually want to do it, not because they think it's the right thing to do, but because they see a ripple effect of what's happening in a market or in an environment and think, oh, I'm supposed to do that as well. And thus they do that as well. Hope that makes sense. So what I'm going to do now is, using that definition of herd mentality, Yogesh has asked me to explain how herd mentality actually applies in terms of the property market in the summertime. So this is how it applies. So summertime comes and more people say, oh, we've got extra time, okay, because it turns darker later. And because they believe they've got extra time, they go out and say, look, they're going to get back onto their property investing horse. They're going to start investing again, or they're going to start investing if they're new to the market. And the moment that starts happening, you get 3 people, 4 people, 5 people, 8 people, 9 people, 10 people, 12 people. You then get the same ripple effect. You get people talking about property more, so people getting interested in property more. And I don't say interest as a fresh interest, like, oh, I'm interested in that, but I mean interest as in a rekindled interest. Someone who's probably already interested in property but hasn't taken the step to get active in property. So interest without activity. Okay, but what happens is when the ripple effects start to flow, start to be sent, and they start to feel like, okay, cool, I could actually do something in property. Oh, now's the right time because everybody's doing it. All right, just think about that statement. Now's the right time because everybody's doing it. Usually, if you understand how a market works, the right time is not when everyone's doing it. The right time is the opposite, when nobody's doing it. So you've got to think about what you're actually trying to do. Yogesh has a great comment in the chat. Yogesh says, that sounds like it might be a good time to sell. Yogesh, that's a smart comment. Okay, if you're the kind of person who's got a portfolio, if you're the kind of person who's got assets, you've reassessed your portfolio and said, you know what, I bought a couple of lemons, maybe the year 2020, the year 2021 helped me realize that, yes, now might be the right time to sell, because you know that potentially there are several indicators saying that the market is going to be on an upward trend, at least for the next quarter. Let's just say the next quarter or the next 2 quarters. Okay, we've got the stamp duty holiday kind of extended, and I say kind of, you guys know what I'm talking about if you've been watching the show regularly. We've got the stamp duty holiday kind of extended, so again that creates some false illusion that the market's doing well. We got secondarily with that the fact we're going into BST, so we're going to end up changing the time. People are going to feel like they've got more time in the day. People are going to be more active, doing more things, okay? And then side by side with all of that, we've actually got the market on an upward trend as of last year. So at the end of 2020, coming into 2021, we heard from all of the statistics that were out there that the property market is actually doing good. It's actually recovered, as they're saying. But yeah, don't take all of these things with a pinch of salt, guys. I'm just saying that to you. Like, don't be the person who just believes the news. Please, please, please. That will get you in trouble. And that's me. That's my advice to you guys. I'm just sharing with you how I see things. For those of you who have been following us on the Impact Show for quite a few episodes, you will know that I'm very, very skeptical about what the news articles say, and I very rarely take those news articles as the kind of news I want to follow. I just use them to kind of give an indication as to what's taking place, and then side by side to that indication, I also use them to help you guys understand how you can decipher what's really going on in the marketplace. So with that being said, let's see if we can jump into the third news article. I think that's also going to be another one that's going to be helpful for you guys to see exactly some of the changes that are taking place, which I personally believe are going to have another impact, specifically in terms of the market and what's happening in the market. Okay, so this is an article that's from Property Week. You guys should be able to see that now. It's just loaded up. Okay, now yeah, we're in dark mode, so I'm not sure if you can see it, but basically the article says, the headline of the article is industry faces a backlash as cladding amendment is vetoed. Okay, now basically this took place yesterday, so again it was on Friday that this article was published. This is a very important article as well, for many of us as investors who own flats, but for many more investors who were thinking of buying flats, okay? Because there's going to be something taking place. Again, you can mark my word on this. I don't mind if you guys come back to me and tell me, Samuel, you said this was going to happen, because this is kind of interesting. But look, I'm predicting, okay, and this is a prediction I'm making, okay? It's a loose prediction, but I'm predicting, and I rarely predict things, but I'm predicting that we are going to have a surge of flats come onto the property market, okay, in the not too distant future. And the reason I'm saying that is because of this specific article, but really not this article, but because of the foundation behind why this article has been written. So let's break into the article, and then we'll jump into the Q&A and the phone line straight after that. And guys, look, if you're getting value on this show, feel free to write the word value in the chat. Side by side with that, feel free to hit the like button, or even share the video with other people who you think will get value from learning and hearing this stuff that we're sharing on the Impact Show. So let's jump in. It says, housing developers face a backlash following the decision by the House of Commons to vote down an amendment to the fire safety bill. It goes on to say, Shadow Housing Minister Mike Amesbury told Property Week he expected protests after the amendment, which would have made freeholders liable for the removal of dangerous cladding, which was voted down on Monday night. There is a real opportunity for leaseholders and there is a real opportunity for leaseholders and campaigners to make their voices even louder as restrictions on protests are removed and people do that in a responsible manner in terms of COVID restrictions, he said. MPs voted 322 votes to 253, a majority of 69, to veto the House of Lords amendment to the bill, which aims to protect leaseholders from paying for the removal of cladding by making developers responsible, with the government paying upfront and then recouping the cost. Now, there's a bit more in there, but without going deeper into that article, I want you guys to understand what's being shared here, because again, these are where you see the telltale signs of something that's going to come. And a lot of the time people are not aware of this news, they're oblivious to this news, and then they just start seeing flats become available, and when they see these flats become available, they start thinking, oh yeah, I want to buy a flat, I think I should buy a flat. Listen guys, you need to bear in mind what's taking place here, okay? So some of us will know, who are based in the UK, I know we've got viewers who are outside of the UK as well, but some of us will know about what happened in the Grenfell Towers tragedy, okay? That was an atrocity that took place where basically there was a fire, a lethal fire, and that lethal fire spread throughout a building due to, well, what later was exposed as poor cladding material on the exterior of the building. Now, obviously, the cladding did not create the fire. The cladding was not the purpose, was not the foundation of the fire, but it was what allowed that fire to spread in such an excessive fashion in such a short period of time, and many people's lives were actually consumed. Now, the reason this is interesting is because as a byproduct of what actually happened at Grenfell Towers, there's been a lot of people lobbying in enough different sectors, basically saying there needs to be change. cladding that is not appropriate, which is on high-rise buildings or on blocks of flats, needs to be removed. It needs to be taken down, okay, because it's dangerous. We've seen from Grenfell Towers the effects it can have, and we don't want that to happen again, okay? And that's obviously, it makes sense. Have preemptive steps in order to rescue people, save people, you know, and preserve life, which all makes sense, okay? Now, the problem with this is who pays, okay? And like anything, that's usually the problem. Who pays? Now, for months, the conversation has been, well, the owner of the house pays, okay? Which, if it's a flat, would be the leaseholder. And what's recently happened, or it's not recently, but what actually ended up happening is the House of Lords actually started to lobby for there to be a legislation put in place stating that the freeholder would become liable and the leaseholder would basically abolish their responsibility for such. So what that would mean, and again, I'm going to give this as an example because I know some of you, if I give the example, you'll get it straight away. What that means is when you see those blocks of flats with like 10 flats in, 12 flats in, which are owned by a council, okay, and I'm using these words specifically and these depictions specifically because I want you to understand exactly why this might have happened the way it happened, okay? So when you see these blocks of flats, okay, that the freeholder of those blocks of the block of flats is the council, for example. So the council own the block of flats, they're the freeholder. And then you've got people who have bought their lease off of the council. So these 12 flats might have been bought by 12 different individuals or 8 individuals, and 2 of them are being used for social housing, and then maybe another 2 of them are being used in another fashion. But the point is, many of these blocks of flats, the freeholder is actually the council, okay? So if the freeholder becomes liable, the challenge with that is really the government are paying, okay? And the question is, where does the government get the money to pay? Well, we all know where the government gets the money to pay. They get the money from you and I. So the thing that's interesting here is there was lobbying for the freeholder to take the brunt of the financial burden to remove this cladding. But unfortunately, that hasn't gone through. The House of Commons have basically vetoed that, thrown it out, and said it shouldn't work that way. Right? Now, if you read on in the article, again, the article is in the description of this video, it goes on to say why they've said that. They've basically said that it's too complicated to give a simplistic solution, as i.e. the freeholder will pay. Okay? And there was also talk about the developers paying as well, which isn't going to happen, and which hasn't happened because, again, developers very traditionally, they are going to develop a building, sell the building and be out. So they've already gone with their revenue. Why would they want to come back now and part with some of that revenue in order to repair the house? So again, guys, stuff I want you guys to think about. How does this affect you, etc., etc., etc. We got another question in the chat. I'm going to come on to that in a moment. Good stuff. All right, now they're the 3 articles I wanted to share with you guys on today's show. We're now going to jump into Q&A, answering some questions. We'll open the phone lines. For those of you who want to call in, feel free to call in. Telephone number is on the screen: 0330 606 0403, 0330 606 0403, and feel free to take the access code which is on the screen also, so you can get directly through to me and I can help you by going through any specific questions you may have. Now, Yogesh is in the comments. Yogesh asked another question. Interesting question. Let's see if we can touch that one as well. So we'll jump onto that in a moment. So look, just before I jump into Yogesh's question, again, guys, just want to share my appreciation with you guys. A great big thank you to all of you who not only have subscribed, who I spoke about earlier, not only have commented on the videos, who I spoke about earlier, but those who have also contributed in any single way to help us improve our show, especially those of you who have participated in our Amazon wish list and sent over any gift to our studio. Now, for those of you who are brand new, Olu said he was new. I had a few other people who said they were new earlier on. You may not know, but we are in the process of building a purpose-built content creation studio so that we could deliver more live stream content to you guys, so we can deliver more recorded videos to you guys in a faster period of time. Now, as a result, we've recently allowed people to jump onto our Amazon wish list, and through means of the Impact Properties Amazon wish list, buy specific things and assets that are going to be inside of that studio, whether they be mouse pads, whether they be monitors, whatever it's going to be. So we're going to actually be buying each and everything on that list. So again, we've opened up the opportunity for those of you who have got value from our show to be able to participate and invest in the show by actually buying and contributing through means of one of those items. So I just wanted to say a great big appreciation to every single person who supported in that way, who additionally every person who's jumped onto the Amazon wish list and sent over a gift to the studio. I've got a caller coming through on the line. So caller, bear with me one moment and we'll take your call. So again, for those of you who may be interested, if you are interested in participating and contributing to our new studio build, let us know. Just write the word link in the chat and we can send the link to the Amazon wish list so you can also contribute in that specific way. All right. So let's jump onto the phone, see who's calling through. We got Yogesh on the phone. Let's get Yogesh's call through and see how we can help Yogesh today. Okay, good stuff. I think we have Yogesh on the line. So without further ado, let me make sure we do. Good evening, Yogesh.
Hi.
How are you doing?
Okay, thanks. How are you?
Excellent. I'm doing well. Thank you. Yogesh, as I usually ask, first two questions. Are you happy for the YouTube world to hear the question that you're going to ask me or any questions you may ask me? And side by side with that, second question all in one, are you also happy for them to hear what I would say in terms of what I would do if I was in your specific situation?
Yeah.
Excellent, excellent. Thank you ever so much, Yogesh. So, Yogesh, you are on the show. Over to you. How can we help you? Let me just open it open to you. And guys, those of you who are watching, let us know if you can hear Yogesh. If Yogesh is coming through loud and clear on your side also. He should be. I think he is. So, Yogesh, over to you. What's your question for today's show?
It's a very specific question.
That's fine.
So I bought a flat and I converted it from a 2-bed to a 3-bed. I did ask for the freeholder to agree that pre-purchase, and their solicitor emailed saying that they would grant the license to make it, to change it from a 2 to a 3-bed, subject to planning and building control. And then I bought the flat, did the works, and I've now got all the planning control, building regulations required. And my question is, they're being a bit slow, how can I push them along about getting the formal license? Because obviously I can't sell the flat on, which is what I want to do, until I get the license agreed. Maybe you have a contact. I don't know if I can have any legal rights to talk to them, or I kind of is everything through solicitors, and it's difficult to talk. The freeholder is an individual, who I think is just difficult to get hold of, but I will keep trying. But maybe, I don't know whether I should go directly to freeholder or not, so that's my other question. But I don't know, do you have any tips on how I can basically try and negotiate this license, so I've got a piece of paper so I can sell the flat?
Awesome.
That's enough information.
Awesome. I think it is, and I think that's a powerful question. I'm just gonna reiterate, so hopefully I'm clear on what the question is specifically, and then straight after I do that, if I'm correct, then we'll use that to basically, I guess, give you kind of what I would do if I was in that situation. So let's start with the reiteration. So from my understanding, you've bought a property. At the time you bought the property, it was a 2-bedroom property. You had the intention to convert that property into a 3-bedroom property, and the seller of the property was aware of that, and the seller of the property had to provide, or the freeholder, excuse me, so I assume you bought it from the freeholder directly. Is that correct?
Yes.
Okay, cool. That makes more sense. Okay, so you've bought a property from the freeholder. It's a flat. And as you've acquired this property, it's been a 2-bedroom property, and you've shared your intention at the time of purchase to convert it to a 3-bedroom property. They said they were fine with that. But up until now, at the time that you're now attempting to try and sell the property, they haven't given you the formal permissions, or you've got all of the building regulations, etc. So you've got all of the paperwork from the government, but you do not necessarily have the freeholder's permission, which you should have had in writing initially. Is that correct?
Yeah, so the last communication I had was that they would consider the license as long as I got all the government permission.
Yeah.
And I think things are just slower than I expected to be.
Yeah.
Yeah, I think that's correct. You got the gist of it. I'm hoping that they will in a few weeks just give me the permission.
Yeah.
License, but I just want to know if there's a way I can hurry it along.
That's powerful. All right, so it's a great question. So basically, Yogesh's question is, how does he increase the speed? How does he make it quicker for him to receive the permission/license from the freeholder of a block of flats that he actually has a flat in, where basically he's converted that flat from a 2-bedroom to a 3-bed? Now, the key to this, Yogesh, is what I speak about quite often, but again, you'll notice it is really communication. Now, you've indicated already that you're considering kind of speaking to the freeholder directly, but you don't know if it's worth it. I would say it's definitely worth it. Reason being, because it's about communication. If you have one conversation with that freeholder and the two of you kind of can see eye to eye, you guys can get this solved very quickly, and then your legal team are only just dotting I's and crossing T's. And what a lot of people don't understand is 9 times out of 10, and again, if you're a solicitor, if you're a conveyancing solicitor or any kind of property solicitor, please don't hate me. I love you guys. I use you guys and I work with you guys and I appreciate you guys. But the reality is, a lot of the time, the solicitors are really the main stumbling block in terms of time. Okay. Not in terms of basic, maybe facilitation, not in terms of getting things done, but definitely in terms of time. Now, why is that? Well, one of the reasons is because they're going to charge you £25 to send a letter. One of the reasons is because they're going to charge you £500 to draft a document. So they generate their income from the time it takes to actually do it, to carry out a transaction. And that is a leverage for them. So the key really for you should be, okay, how do you solve this as quick as possible? Whenever I go into any transaction when I know I'm using property solicitors, in the back of my mind, I'm saying to myself, how do I solve this? Now, the way I started to solve this about 4.5, it's roughly 5 years ago now, but the way I started to solve this 4.5 years ago is by actually building my own power team of property solicitors who understand the kind of speed I want to work with. And because I'm doing repeat business with them, it makes it easier for them to be able to actually fulfill that time frame, because they know this is Samuel's expectations. And side by side with that, I now know their kind of work ethos and their mode of operation. Now, the challenge you're going to have is your solicitor, the solicitor on your side, isn't going to be the only solicitor involved. It's going to also be your solicitor liaising with the solicitor of the freeholder. So it may be somewhere in there's a bottleneck. It might be the freeholder solicitor that's the bottleneck. It might be your solicitor that's the bottleneck, depending on who you're working with and obviously your working relationship with them and their mode of operation. So what I would say to you is, yes, if you can, again, whether it's a simple letter that you get formulated to the freeholder, just to articulate the fact that you think it would be good for you guys to talk in order for you to solve the situation at your earliest convenience, or both of your earliest conveniences. Now, I'm going to say this because I've got one of my coaching clients who reached out to me yesterday for something similar to this. Please, Yogesh, if you're going to write a letter, or if you're going to, create some level of communication to the freeholder, do not articulate. I would not, let me say it in first person, I would not articulate that communication in terms of its benefits to me. I hope that makes sense. I wouldn't be saying to the freeholder, listen, I need to do this in 3 weeks so I can do this and so I can this, so I can, no. I would take the so I can out, okay? And I'd be putting in the benefit for them. So what is the benefit to the freeholder in actually producing what you've asked them for? One of the benefits I can tell you off the top would be their integrity, their name, okay? Because if they've said to you on completion of the sale, they'll be happy to grant you permission as soon as you have all of the legal documentation, then you want them to know that you're going to see them as an integral person, and they will be acting as an integral person if they actually provide what they said they're going to provide. So that's one of the benefits to them that I would put out there. Okay, and there's several more. Another one of the benefits that I'd encourage you to potentially throw their way is obviously the fact that there may be a monetary benefit for them. Okay, now I don't know the situation you guys have. I don't know if part of your sale closure price was incumbent upon this. I assume it wasn't because of how you've explained the question. But again, if I was going into a sale like this, that might be something I would have done. I might have withheld 20,000, 30,000, 10,000 of the actual sale price, contingent on the fact that when I have my paperwork, you would sign off and give me my permissions, and I would then obviously pay you the remaining 10,000 for the price of the property. So again, these are things you can think about. Again, you can hold that sometimes as a bond. So again, if I buy a flat for 290,000, I can say it's a 290,000 pound purchase price with a 10,000 pound bond, which will be held until I adequately apply for building regulations, all of the other paperwork, get that in, and successfully then get the permissions from the freeholder. So again, not saying it's something you can do now because this is after the fact, but this is something I would have considered doing going into the deal. So those are some of the things you could do. But again, the key to what I'm saying is reach out to them, have direct communication with them, and in your direct communication, assert the communication in their benefit, in formulation of their benefit, not of your benefit, which is one of the biggest mistakes most people do. Most people are only talking about them, and not you. So that's what I'd say. Does that help?
That is helpful, but two things. One is I can't really see the benefit from them, apart from what you mentioned, integrity. I can't really think of other benefits for them. And what if they just ignore my letter?
Okay, now ignoring your... That's a great question. So again, guys, I believe you can all hear Yogesh. If you can't, just to repeat his question. So the question is, what happens if you send out a letter, a marketing letter or any kind of letter, and the person you're sending the letter to basically ignores your letter? And also, what is the real benefit in this particular situation that Yogesh has asked? What is the actual benefit for this specific freeholder in order to transact with Yogesh beyond the integrity that I've mentioned a moment ago? So first thing is, if they ignore your letter, obviously the only other thing you can do, if the only communication means you have is their address, is to continue writing letters or to go and knock on the door. Okay, so that should just be said off the front. Okay, if your letter gets ignored, if you've got a marketing campaign going on, or if you're sending a direct singular letter to one particular freeholder for one particular purpose, the only thing you can do if they don't answer your letter is write again. Okay, one of the things you can do, which people used to do years ago, 30, 40, 50 years ago, which people don't do anymore, is increase the frequency of your written letter. So for example, if you write a letter, no one responds, you might write a letter every single week. You might write a letter every single day. And again, if you write a letter every day, send a letter every day, they'll receive a letter every day and they'll know that you're serious. Okay. But the point I'm making is, the only thing you can do if someone ignores your marketing campaign, i.e. a letter, is increase the frequency, or if you want to, forget it. Okay, you can forget about it as well, just the way they've forgotten about your letter. So again, that's the first thing I'd say to you. The second thing is, besides integrity, what other benefits do they have? So I'm going to ask you some questions in order to get to a real position on this in terms of what could be helpful. So the first question I'd ask you is, who's currently living in the property right now?
Can you hear me?
Yeah.
It's rented out.
Okay, it's rented out, but to who? To an individual, a family, the 3 people, 4 people, 1 person?
I think it's like a couple.
Okay.
2 people.
Okay, cool. So you've got a flat you bought as a 2-bedroom that you've now converted to a 3-bedroom, and the people, the constituents, the tenants, the residents inside of the property are 2 people, which are a couple. Okay. Now, when you transact, you have to sometimes think outside of the box. Okay. So right now you're saying, okay, well, besides integrity, what other benefits are there for them? Okay. Well, they're a freeholder. So what does a freeholder want? A freeholder wants peace of mind, and a freeholder gets peace of mind by first and foremost making sure that the leaseholders who own the assets within the freehold are reasonable people who do reasonable things. Okay, they don't do unreasonable things, and they're not unreasonable people. That's first. But then the second layer of that are the actual residents, the actual tenants, because those tenants equally create an element of headache or peace of mind for that freeholder. So you might want to start thinking to yourself, okay, well, after I get the 3 bedrooms done, am I going to change my tenants from the couples to someone else? Or am I going to increase my rent? Or am I going to this? Am I going to that? You've got to understand what you're going to be doing. What's the long-term plan with the property? Now, if the long-term plan is in favor, so for example, if I'll give you my example, okay? Let's say I bought a flat, £290,000. I put a couple inside of that flat. I then had the plan to change it from a 2-bedroom to a 3-bedroom. I've then changed it to a 3-bedroom. Straight after changing it to a 3-bedroom, I get to this predicament where I can't get the actual permissions I need. I might say to myself, well, hold on a minute. What's my long-term plan? As a 3-bedroom, I'm going to keep these tenants in. These tenants are happy to pay me what they've been paying me or the adjusted rent that we've arranged. Now, the freeholder knows these tenants have been tenants for the last 2 years, and they've been good tenants for the last 2 years. That might be something I write to him about in the letter. I might say, look, you mentioned that you were going to be able to do this for me on completion of me having the paperwork. I assume it may be our legal representatives that are taking long, causing this to drag out. However, I have tenants in the property who are really happy about the place, really happy about the space, really happy to continue as they've been there for the last 2 years and to continue on into whatever the foreseeable future. However, one of the things that make this a challenge for me is XYZ. And you might say, I might have to change tenants if, for example, I'm not able to get this paperwork in time because whatever the ramifications might be of you not getting the paperwork. So it's not necessarily, okay, I see all the benefits for them. Sometimes it's what is a benefit for you and how do you spin that to show them that there's a challenge built in there which actually could favor them as well. So for example, to have the same tenants that have been there for the last 2 years from a freeholder's perspective should be beneficial for them. Now, if we continue that on, that should be even more beneficial for them. But if for some reason I'm unable to do that because I need certain paperwork in order to keep them, or I need certain paperwork before I decide whether I'm going to get rid of them, which you might share with them, then again, that might be something where they say to themselves, okay, cool, there's a reason for me to push on with this. There's a reason for me to share this. So I guess, it's a bit challenging not knowing the intricacies of who's there. Obviously, you've mentioned a couple, but like the intricacies of that, how long they've been there, were they there after the 3-bedroom conversion, were they there before when it was 2 beds, etc., etc. It's a bit challenging to give you kind of a pinpoint, this is what I do. But I guess the real principle behind what I'm saying is look at some of the benefits that you are going to reap and think about it from the freeholder's perspective, how they might be a benefit for them as well, i.e. continuing with the same tenant, for example. And then look at some of the challenges you might have to doing that as a result of not necessarily getting these permissions, and then flag them up. Again, you don't have to articulate them clearly like this is exactly what's going to happen, but you can flag them up. You could say, I wouldn't want to be in a position where due to not having adequate paperwork, my tenants decide to leave, or anything of that nature, okay, due to building regulation, etc. You can flag them up, and as you flag them up, hopefully if the freeholders are reasonable, and the good thing for you, I think anyway, is the fact that your freeholder is an individual, because if your freeholder was a bureaucratic big organization, it could take you a lot longer to get to this process of actually getting the permissions you're asking for. So again, hopefully that helps, Yogesh. Hopefully that allows you to see how you can potentially start to pluck out some of the benefits potentially for the freeholder.
Okay, cool. Yeah, that's helpful. Yeah, and
awesome.
And last question: you don't have any contacts that might help you in this area, do you?
You know
that later?
Yeah, the answer to that is yes. I guess quick plug. I don't know if you've heard of Bernie, but I would say Bernie Wells. is definitely someone you can connect with. Bernie's got a YouTube channel. Bernie's on YouTube, so again, you can find him out on YouTube, Bernie Wells, or reach out to him. He's one of the speakers on the pin circuit. Well, he hasn't spoken on the pin circuit for about 2.5 years, because he's really been focused on his own property stuff. But Bernie deals with any person who's dealing with any kind of challenges as it pertains to flats and leases. So Bernie would be a good person, a good point of call. Yeah, give Bernie a call. Reach out to Bernie. He's someone who could definitely help on that regard.
Yeah.
Yeah.
That's a good idea. I've spoken to them before. So I know
Excellent.
Yeah.
Excellent. Excellent.
Thank you so much.
All right, most welcome, Yogesh. Great to have you on the show. Great to have you calling in again. And fantastic question. Thank you for asking. All right, guys. So that was Yogesh. And as mentioned, you guys would have heard Yogesh's question, which I thought was a really good question, speaking specifically about the flat that he's purchased, and he intends to turn from a 2-bedroom into a 3-bedroom, or has already turned from a 2-bedroom to a 3-bedroom, and is now working on getting all of the paperwork in place. He's got the governmental paperwork in place, the building regulations, etc., but just being challenged in order to get the paperwork from the specific freeholder. And this happens sometimes. So guys, again, what property challenges do you guys have? Let us know in the chat, so we can continue to answer your questions and help you guys move further, faster in your property investing journey. So Yogesh, again, thank you for your call. Now let's just look into the chat real quickly. Let's see if we've got specific questions that you guys have asked. As you guys know, we've got, wow, not long left, but it's all good. We are here to help you guys. Let me do this just before we push forward. Just want to let you guys know, if you haven't already gone and got this free resource, I want to encourage you to go and get this. These are your 7 best books for your property investing success. This is a book list that I created. I'm an avid reader. Everyone who knows me, who's been following me for a while, knows that I'm an avid reader, and I'm always keen to learn more about the property investing market, the journey, etc. So what I've done is I've compiled a book list for you guys in order for you to see the 7 best books that will help you on your property investing journey in order for you to have property investing success. Go to the link impactproperties.co.uk/book list, impactproperties.co.uk/book list. Go grab your own copy so you can ensure that you're keeping up to date with the latest strategies in terms of moving forward in your property investing journey. All right, guys, so take full advantage of that. Now, jumping into the chat, let's see what we've got here. Okay. And that key resource, again, so many people have jumped onto that key resource and mentioned how it's been helpful for them. So, guys, if you are looking for resources to help you move forward, make sure you take advantage of that. Okay, let's see. Okay, so Yogesh's question is the first one here. Yogesh says he's just wondering why there are more flats on sale. Cladding prevents legal sales going through as lenders won't lend on them, and that's totally true. That's totally true. So basically, what's going to take place is there's a lot of people in the property market who are novices, okay, and a lot of investors generally tend to take advantage of other people's naivety, okay, and you see this best. I will say this because, again, I'm not saying this because I'm picking on anyone. I'm just saying this because this has been my experience. But you see this best and you see this most when you look at developers, okay. So this is something developers do, in my opinion, kind of like all the time, okay. You get these developers, they'll build a property, okay, and from building a property, they'll say to themselves, well, I'm going to sell this property, okay, and I'm going to sell this property for X price, okay, and I'm going to tell people that this price is justified for some reason, okay, and we don't even know where they get their justification from. Maybe they just add a percentage on top of whatever the closest comparable is. But one of the things you should find is if you go to any area and you look for the prices of property, you'll always find that the new builds just seem to be more expensive. And the question is, why is that? Is it because they're new? Okay, is it just because they're new? If I'm getting less space, which generally new builds will give you, why am I paying a premium for less space? Okay, but again, people that are a bit naive, they don't understand this, and because they don't understand this, what they do is they run along in order to buy a property with less space so that they can say to themselves, okay, I've got this new deal. Now, the way that happens a lot of the time is the specific person who's actually buying this property or buying this going into this transaction with the developer, they'll meet the developer, and the developer will effectively have a sales agent who convinces them into that acquisition. The developer salesperson will basically tell them, look, these are the newest apartments, they're in the greatest area, they're 4 minutes from the station, they're this, that, blah, 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 blah. Now, the reality is you can go and buy a larger square footage. You can go and buy, the same amount of bedrooms in 4 minutes the other way in something that isn't a new build, probably for a fraction of the price, okay? 70% of the price, 50% of the price, depending on where you are, okay? Depending on where you are. Now, why is this important? The reason this is important categorically, okay, is because it shows the naivety that is in the property marketplace, okay? And I don't want to mince my words about this because I want people to understand this very, very clearly. There is a lot of naivety in the property marketplace. There's a lot of people in the property marketplace who do not know what they're doing. There's a lot of people who, because they've bought a property, believe they know what property is all about, okay? So let me say all of that again so you guys understand me. There is a lot of naivety in the property marketplace. There are a lot of people who think because they've bought a property before, they know what they're doing as it pertains to property. Let me tell you something. Property ownership and property investment are two different things. I've said this before, I'll say it again. Property ownership and property investment are two different things. And because there's so much naivety in the property market, this is the reason why people will take advantage of those who do not know, such as the developer who develops a block of flats and charges you 400,000 per flat, per 2-bedroom flat, when down the street you can buy an ex-local authority for 300,000, for 290,000, spend 10, 20,000 on it, and it will basically be all bells, all whistles, just like the new build, plus a larger square footage, a larger footprint. Okay, so these are things we need to start to think about and ask ourselves, well, why does this happen? Why should that happen to me? Why should I be the naive one who goes into that transaction and walks away losing? All right, now another thing, the reason I do talk about this, again, like I said, I'm not picking on developers. This is not what I'm trying to do, okay? But I want people to be aware, because there are so many people who I come across who go on these massively priced property training courses. And whilst they're on these property training courses, some of these property training providers quite unscrupulously convince people to go and buy new build properties, okay? What they call off-plan properties. And they get told, yeah, it's going to be 400. It's going to be worth 400. By the time it goes to the market, it's even going to be worth 450. So you buying it at 400, you're getting a deal, okay? Playing on people's naivety. Now, let me tell you something. You can't value something that does not exist, okay? I'm going to say that again. You cannot value something that does not exist, okay? Every step closer to something's existence is a step closer to being able to adequately value it. Okay, you cannot value something that does not exist. Okay, you need to write that down. Hashtag Samuel I Can Win. Throw that on Twitter. You cannot value something that does not exist. Now, because so many people do not understand that factor, they will buy into off-plan opportunities. They'll buy properties before they're built. They'll pay the 400,000 or whatever proverbial price they'll pay, and then when that property hits the market, the whole market will realize, hold on a minute, that's 2 bedrooms in that street, and that's 2 bedrooms in that street, and this one's the new build for 400 on the market for 450, 400, whatever, and this one's on the market for 300. Which one do you want? And so many people, not everybody, but so many people will go and buy the 3-bedroom, the 2-bedroom for 300. All right, now, the reason I'm sharing all of this is because all of this touches on Yogesh's question, okay? Although mortgages may not be obtainable, people can still market properties that are unmortgageable, okay? Whether that be a house which is derelict with no kitchen, or whether that be a flat which has cladding on it, which the mortgage companies are going to be reluctant and resistant to actually put in an offer on. But what happens now is you get buyers or prospective buyers who will go into those transactions, and in some cases, some of them are going to be able to pay cash, and some of them are going to say, yeah, I'll buy this, go through the rigmarole of the solicitors, etc. Because they're not using a mortgage product, 1 or 2 people may get caught out, okay? And this is the reason I want to bring it up on the show. This is the reason I want to talk about it, because I want people to be safe. I want people who are jumping on this show to understand how they can be protected by thinking ahead, by not just necessarily jumping headlong into a transaction that they shouldn't be. So hopefully that answers Yogesh's question. Guys, we've got to keep our eyes open. This is the key. Okay, if you want to successfully invest in property, that is the key. You've got to keep your eyes open. Phone line is closed now, guys. Thank you, those of you who did call in. And thank you for those of you who asked your question. We've also got questions coming through on the chat. So I'm going to jump into the chat, see what other questions we've got. A few announcements, guys, for those of you who really want to continue to rock with us. First and foremost, if you missed our 21 days of your property investing success, we had 21 days of a live stream value and content where I broke down 21 principles, 21 keys that will help you move further faster in your property investing journey. We started that on the 1st of January 2021 and we finished that on the 21st of January 2021. And I know some of you, especially those of you who are new to the channel, may have missed that. What you can do is you can go to the link impactproperties.co.uk/day one. That's impactproperties.co.uk/day one, and you can go and watch all of those videos. The whole playlist is there, all 21 videos, lots of content. You know, I think the shortest video in that series is like an hour long, and that's 21 videos. So that's over 21 hours of value breaking down to you guys how you can make 2021 your best year ever as it pertains to property investing. Guys, let me tell you something. If I was new starting out my property journey, or if I was a mature investor who wants to level up my property journey, I would definitely go and start consuming some of that content. That 21 days was life changing for many people. So guys, I want to encourage you, go watch that video, impactproperties.co.uk/day one, and just plug in, tune in, get the value out of that content that we put on there absolutely for free for you guys. Now, side by side with that second announcement, if you're interested in supporting our channel through means of any kind of financial donation, you can go to the link impactproperties.co.uk/donate. That's impactproperties.co.uk/donate. And listen, guys, if you're one of those people who just want to support in a non-financial way, do so as well by hitting like, pressing subscribe, and even throwing a comment in the chat, whatever that comment is. And listen, guys, let me tell you something. If you dislike the content that we're sharing on the channel, let me tell you what to do. Hit the dislike, the thumbs down button twice, and then leave a comment and tell us why you disliked the content. Okay, so if you dislike this content, if you are not getting value, if you think this does not work or something's wrong with this content, hit the dislike button twice, and straight after that, let us know in the comments what you disliked about the show. Link is on the screen for those of you who want to participate through means of the Amazon wish list, the studio build link, impactproperties.co.uk/studio build. Those of you who want to donate monetary value, impactproperties.co.uk/donate. And last but not least, those of you who want to rock with us in the week, not just on the Saturday show, we got our Facebook group, which you can join, impactproperties.co.uk/join impact investing. That link is in the description because it's a little bit long. impactproperties.co.uk/join impact investing, and you can connect with us and continue to find out what we're doing on a daily basis in terms of the Facebook group and the kind of things we're sharing with the community, because that's what we like to do, guys. We like to share with the community. All right, I'm jumping back into the chat. I'm gonna have a quick look to see if we got any other questions that I may have missed. Do we have any other questions? Let's have a quick look. If we got any other questions. Excellent show. Advise everyone to call in for a deep dive advice. Okay, cool. I believe I've actually answered all of the questions. So guys, without further ado, it gives me the great pleasure to say to you guys, if you haven't already, I want to encourage you to go and register for our masterclass, which is taking place on Monday at 8 p.m. We run these masterclasses every single Monday at 8 p.m. And the topic of the masterclass is how you, yes, you can take advantage in this current climate and win. If you're interested in basically registering for the masterclass, all you need to do is go to the link on the screen right here, impactproperties.co.uk/masterclass. That's impactproperties.co.uk/masterclass. On that masterclass, I'm going to break down for you on Monday for over 2 hours the 3 secrets that you need in order to find great deals regardless of the current climate. And guys, let me tell you something. If you've been listening to what I've been sharing with you on today's show, you understand that now is the time. That is going to be 8 p.m. Okay, the show, the masterclass is going to be 8 p.m. on Monday. But again, guys, like I said to you, you understand, if you've been watching this show so far, that now is the time to understand how to invest in property in a way slightly different to how you may have been doing so in the past. Because if you're going to do what you've always done, you're going to get what you've always got. So why don't you go to that link right now and register, impactproperties.co.uk/masterclass. Be a part of our masterclass on Monday at 8 p.m. and learn the 3 key secrets that you need to take advantage in this current climate and win. And with all of that being said, Samuel I Can Win, I'm signing out. Happy investing. Have a great day, guys.